Egypt inks billions in contracts under its privatization program, and OPEC's head projects energy demand to rise by 23%. You're watching the Daily Brief with Forbes. I'm Ramia Faraj. Egypt has signed $1.9 billion of contracts with private sector investors under its privatization program. $1.65 billion was paid in foreign currency and the rest in Egyptian pounds. The deals include a $700 million investment by Talat Mustafa Group in state-run hotels. Egypt also sold $800 million in minority stakes in Egyptian ethylene and derivatives company National Drilling and Egyptian linear Alkyl Benzene to Abu Dhabi fund ADQ. Officials say a further $1 billion in deals will be announced. BMI, a unit of Fitch Solutions, expects Egypt to see real GDP growth of 4% in the fiscal year 2023 to 2024 from 3.8% a year earlier. This will be driven by higher investment from Gulf countries through its privatization program. BMI, however, says growth will remain weak as inflation and subsidy cuts will heavily impact consumption. Inflation is expected to average 37% this year due to weaker currency and increases in telecoms, fuel, and electricity prices. Egypt's inflation shot up to a record 36.8% year-on-year in June. Global demand for all forms of energy is projected to increase by 23% through 2045. OPEC Secretary General Haytham Al-Ghais says the global oil industry needs $12.1 trillion in investment during the same period. He says the sector is not yet on track to meet that figure and describes calls to limit or halt funding new oil projects as unrealistic. OPEC executives and officials repeatedly warned that prices would jump higher if the oil sector doesn't see continued investment. Saudi has boosted Pakistan's desperately low foreign exchange reserves with a $2 billion deposit, bringing its total foreign reserves to $6.5 billion. This is an almost 50% increase compared to last week's account balance. The economy has been stricken by a balance of payments crisis as it attempts to service crippling external debt. Political chaos has deterred foreign investment, inflation has rocketed, the rupee is at a record low, and it's struggling to afford imports, causing a severe decline in industrial output. Wall Street stocks rose for a second straight session overnight ahead of a key U.S. inflation report that will affect the odds of further Federal Reserve interest rate hikes. Analysts say the breadth of the market rally, which goes beyond tech stocks to industrials and other sectors, could indicate the market might have more upside in the period ahead. The Dow Jones finished up 0.9%, the S&P 500 advanced 0.7%, while the tech-rich Nasdaq climbed 0.6%. A California judge has ruled in favor of Microsoft's $69 billion acquisition of video game giant Activision Blizzard. It strikes down an attempt by the Federal Trade Commission to block the massive merger and gives Microsoft the green light to close the deal, which is designed to help it compete with Nintendo and Sony. Microsoft's purchase of Activision, the maker of gaming franchises Call of Duty, Overwatch, and World of Warcraft, would be one of the biggest in tech history. U.S. banks' Q2 earnings are expected to show lower deposits and more bad loans. Banking analysts are anticipating subdued profitability and not a repeat of the crisis that pummeled the industry this spring. The Q2 reporting season kicks off Friday with reports from JP Morgan, Citigroup, and Wells Fargo. Next week, Bank of America and Goldman Sachs will release their earnings. Their results extend a reading on the U.S. consumer because of their extensive credit card operations and lending tied to home and car loans. And companies around the globe took on a record $456 billion of new debt in 2022-2023, although higher interest rates should reduce appetite for new borrowing ahead. A Janus Henderson report says the new debt pushed outstanding net debt up by 6.2% to $7.8 trillion. The index monitors 933 large listed non-financial corporates globally. It shows U.S. telecoms group Verizon became the most indebted firm, while Google owner Alphabet remained the most cash-rich company. I'm Ramia Faraj. This is the Daily Brief. Thanks for watching. Bye for now.